Fed, the Fed, the Fed, the Fed, the Fed. Trump is trying to fire Fed board member Lisa Cook due to mortgage fraud. Now, he claims because she committed loan fraud that she's not fit to be on the Fed board. So what do you think about this? Should loan fraud exclude you from being on the Fed board? Establishing loan fraud is a pretty easy thing to do. In her case, she claims 2 homes on her loans as her primary residence. Now, since you can't be in 2 places at one time, that might just be the case. However, if she bought her first home and then she moved and is living in her new home as her primary residence, then maybe she's okay. I think this one would be pretty damn easy to establish, but according to the FHFA, it's fraud. Now here's a quote. Trump cited his authority under the Constitution and the Federal Reserve Act of 1913 as justification for his decision to remove Cook. The Federal Reserve Act established the president's ability to remove governors from the board for cause. The president said in his letter that there was sufficient reason to think Cook made false statements on one or more of her mortgage agreements. And did you know that mortgage fraud can carry up to 30 freaking years in prison? Loan officers, you have to understand this one point here. There is not one deal that's going to make your career, but there is certainly one that could ruin your career. Did you know that many of your loans right now, even prior to close, lenders are looking the likes of Airbnb up and rental sites to see what you're really going to do with your home? True story. The problem is they're finding fraud. I spoke with an account rep who told me this very story. They were getting ready to fund a loan and decided to check it out on short-term rental sites, and there sat the house already being marketed on Airbnb prior to close on a loan that was being done as a primary residence. Point being, the FHFA isn't just looking at political opponents, though they are for purposes of fraud. They, in fact, are looking at everybody. So don't walk that line. Nothing good is going to come from this. Now, did you know that Millennials and Gen Zers are looking at ARMs and refinances for refinances? And this is according to Fortune magazine. This is a gamble. What do you think about it? Is it a gamble or not, getting an ARM? Personally, I think it's a great idea. From Fortune, although mortgage rates peaked in the 8s in late 2023, they remain relatively elevated at about 6.5%. We have lower rates over at Loan Factory, but I digress. You really should talk with us. But some members of the younger generations continue to bank on mortgage rates dropping in the near future, even as real estate experts warn that this hope is unrealistic. Now, here's the deal. If you think you're going to see rates in the 3s again, think again. That's unrealistic. If you're thinking 5s, perhaps, if the economy goes completely down the drain. If getting an ARM gets you in a house, and if you have a reasonable expectation of future pay increases, then an ARM might just be for you. It's not a bad idea. It's a case-by-case basis. The truth is, those 2s and 3s that we had is the worst thing that ever happened to the housing industry. Setting unrealistic expectations, driving home prices up. Remember, we have homes priced for a market with 2s and 3s, not 6s and 7s. So of course everything is unaffordable. And folks not selling their houses or even buying. Sellers are holding on to those 3s with what we call golden handcuffs, and buyers assume those rates are the norm and they're going to go back down again. In short, those low rates have effed this market up for the past 5 years. Now, since today's show is about rates, fraud, and the Fed, it's worth pointing out that the Fed is probably going to lower the Fed fund rate in the next meeting. Now, here's the funny thing to watch for. The day the Fed announces that they're going to lower rates, the fund rate, on that day, I bet rates go higher than the previous day or week. Now, why is that? Whoever figures this out, put it in the comments down below. And well, you get the privilege of spending the rest of your day with the knowledge that you know more about the mortgage business than 95% of your peers. Oh, and bust your ass today, because nothing is better than sweat equity in your business. Hope this helps. Hey guys, Brian Stevens over here at Mortgage Shots in the National Real Estate Post. Hey, listen, we're doing some great stuff over at the Loan Factory. We have our own team inside the Loan Factory. We crowdsource everything. We time block our calling hours, and we get results. Like my loan officers and me right now, we're not struggling in this market at all. If you want to be a part of what we're doing, all you have to do is come to pods on Tuesday or Thursday, or just reach out to me. Fill out the information down below. Let's have a conversation.